Hello, investors and future investors. Welcome to the channel. For today's video, I'm going to show you some more leaps that I'm going to buy in order to add to my portfolio. Now, as you guys know, on this channel, I like to use long-term option strategies in order to make short-term gains. Now, if this is something that you can relate to, or you're new to options trading, trying to use options in order to generate some extra income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you two more leaps that I decided to add to my portfolio. Now, I did make a prior video that says leaps I'm going to own in my portfolio, and you guys seem to love that kind of content, so I decided to show you two more that I am going to add. Now, I do have one already in my portfolio. What I'm going to be doing right now is just going to be dollar cost averaging into getting some more. Now, for the first stock for today, we're going to be using is going to be Super Micro Computers, ticker SMCI. Okay, so here we are on SMCI, and you guys know how we do it. Let's go ahead and get down and dirty with options. And to get started, we're going to go into trade SMCI options in order to open up the option chain. Now, this part down here is known as the option chain. Now, before we get into this actual option strategy, I would like you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What might work for me might not work for you. Second thing is, always make sure you have an exit strategy before entering any option trade. Now, for those of you that do not know what a LEAPS option is, LEAPS is an acronym that stands for Long-Term Equity Anticipation Securities. It's just another name of saying a long-term contract that expires a year and beyond. Now, let's go ahead and get into this strategy by using super microcomputers. Now, to get started, we're going to go to buy, we're going to go to call, and now we're going to go ahead and choose our strike date. The strike date is one of the most important thing for a LEAPS option because that's actually what makes it a LEAPS option. It has to be a long out strike date. Now, for it to be a LEAPS option, it needs to be about 365 days or more. In this case, the closest one to that is going to be the March 20th, 2026 date, and that gives us 341 days. So we're going to go ahead and use that one just for the example for this video. Now, in order to maximize the efficiency of this option strategy, we're going to go ahead now and we're going to choose our strike price below the current share price. As you can see, the current share price is $34.46. So we're going to be using the $30 strike price. Now, the strike price you're going to be using is going to be based on your personal preference, the research you did prior to getting to the LEAPS option, and your overall portfolio goals. Now, based on what I have discovered, I think the $30 strike price is perfect for me. Now, with the $30 strike price, I have a break even of 42.20. Now, the break even, what the break even tells you is that once this share price right here goes anywhere above your 42.2 by expiration date, then you're going to be breaking even. You will not be losing any money in the contract. Now, key things to remember, this share price has to be at this price by this expiration date in order for you to not lose money. If, however, the share price is above this before the expiration date, you are really making money. So keep that in mind. Now, with the $30 strike price and a $42 break even, that's going to give me a 0.7 delta. Delta is a very important factor when deciding what LEAPS option you're going to get into. So we're going to discuss the delta in detail. So firstly, how does the delta work? The delta is going to tell you that any movement in the share price of $1 in the upward direction or the downward direction is going to cause the same move of your delta, which is 0.71, and that's going to increase your overall contract. So let me break it down and see if I can make it easy for you to understand. If the share price goes from 34.60 to 35.60, then this overall contract is now going to go to 12.45 plus 0.71. So what that's going to do is that it's going to increase the value of your overall contract. So let's go ahead and we're going to select this right here. So as you can see to the top here, a long call. Now, why would anyone want to get into a leaps option or a long call? Well, it's simple. The leaps option is a bullish option strategy. But anyone that gets into a leaps option, they're of the mindset that this share price right here is going to appreciate in value before this strike date right here. So by buying a leaps option, all the person is doing is giving himself enough time in order for the trade to work in their favor. So the leaps option is a bullish option strategy. Now, there's a couple of reasons why anyone would have a leaps option. The number one reason I just mentioned is that you buy the leaps option and you wait for the share price to appreciate in value. That's one way you're going to make money. The other way you're going to make money is by controlling 100 shares of the stock. A leaps option is a cheaper way in order for you to control 100 shares of the stock. Let me show you what I mean. If you were to buy 100 shares of SMCI right now, it would cost you 34.59 multiplied by 100 shares, and that's going to give you $3,459. However, if you were to buy a LEAPS option, that would allow you to control 100 shares for $12.45 or $1,245, which is less than half of the cost if you were to buy it outright. Now, that is one LEAPS option I'm picking up. Now, the reason why I like to pick up LEAPS option is a major part of my overall portfolio, and that's because I love nothing better than to use long-term investing strategies in order to make short-term gains. Now that I have a LEAPS option in my portfolio, I can't wait until the share price appreciate. But what I do is that I use them in order to make consistent income, and I'm going to show you that right now. So, assuming we have this LEAPS option right here at $30 strike price, my break even is 42.20 and my delta is 0.71. Now we're going to go ahead and we're going to use it to make consistent income. And the way I do that is by changing up the option strategy. So, we're going to go to sell, we're going to go to call, and now I'm going to go ahead and choose a strike date. Now this strike date is going to be a lot closer in than my LEAPS option. Now for these kind of stock, I like to do around 2 weeks. So I'm going to go with April 12th. That gives me 12 days to expiration. Let's go ahead and we're going to select that. Now I'm going to go ahead, I'm going to choose a strike price here above the share price. So in that way, I know I would not be losing. Now, ideally, what you want to do is that you want to choose a strike price that's either your break even or higher. And that's going to be the $42 mark right here. If I get this $42 strike price right here, if I get this $42 right here, it's close enough to my break even price, which is going to make me feel comfortable. Now, with the $42 strike price right here, I now have a chance of profitability, as you can see to the top here, of 92%. What your chance of profitability tells you is that you have a 92% chance that this stock is going to go in your favor. What it also tells you is that you have an 8% chance of this trade going against you. Now, for taking such a high chance, you're going to be paid. The amount of money you're going to be paid is going to be 0.29, or as you know, each option contract is multiplied by 100 shares. So you simply multiply your 0.29 by 100, and that's going to give you $29. This can be done every 2 weeks in order for you to secure around $29 into your portfolio. Now, for most of you watching, I know you're going to be thinking $29 is not much. However, remember, the whole purpose of buying a LEAPS option is in order for you to keep it in your portfolio while the share price appreciates. By selling covered calls against your LEAPS option, that's just a secondary option strategy that allows you to grow consistent income while you're waiting for time. Remember, you did buy the LEAPS option about a year out. So that is how I use my LEAPS option, and that is one LEAPS option I am going to buy in my portfolio in order to add to my position. Now, the second LEAPS I'm going to be buying in my portfolio is going to be with the stock trade desk or ticker TTD. Okay, so here we are on the trade desk option chain, or rather TTD. Now we're going to use the exact same strategy, and I'm going to show you which option I will be picking in my portfolio. Once again, guys, please do your own due diligence. Don't do what I'm doing. I'm simply using my portfolio to show you how I make consistent income using long dated strategies. So once again, we're going to go to buy, we're going to go to call, and I'm going to select the strike date. And once again, I will be going with the strike date of March 20th, 2026, which gives me 341 days to expiration. Let's go ahead and select that. Now, once again, in order to increase the maximum efficiency of this option strategy, it is highly advisable that you choose your strike price below the share price. Can you choose a strike price above your share price? Hell yeah. Is it advisable? No, it's not. So, because I've done my own due diligence and I already have this stock in my portfolio, I know how to trade this stock. That makes me profit. So, the strike price I'm going to be going with is going to be the $50 strike price, and that is right at the money. If you're new to options trading, at the money simply means the closest strike price to the share price. So $50 is at the money, so too is 52.5. They're both the closest to the share price, one up, one down, so they're both at the money. So I'm going to be going with the $50 strike price right here. Now, for the $50 strike price, I'll be having to pay $13.15 or $1,315. Now, this is where I make most of my money because if I were to buy 100 shares of TTD right now, it would cost me $5,099. By acquiring this LEAPS option, it's actually going to cost me less or almost one quarter of the price. So, with a $5,000 portfolio, I could probably get around four of these contracts. However, please trade carefully. Now, the reason I decided to go with the $50 strike price in order to pick up a trade desk LEAPS option is because I know this stock. I already do have this LEAPS option at a $60 price. What I'm doing now is that I'm going to be DCAing in LEAPS, or rather, I'm going to be dollar cost averaging with my LEAPS. I did make a video about how to dollar cost average with LEAPS option. So since I have a LEAPS option expiring January 2026 at a $60 price, I'm now getting one at a $50 price. I'm just lowering my average cost for my LEAPS option, which is not much by the way, because my first LEAPS option cost me $1,375 and this one is $1,315. So it's still around average of like $1,300. Hopefully you guys understand that. Now, once again, with this LEAPS option in my portfolio, I'm of the mindset that this share price is going to be going up in value over time. And I believe very strongly that come March 20th, 2026, TTD share price is going to be way higher than the $50 mark. And that is how I'm going to make the majority of my money. And that is known as investment gains. The money I invested, I'm now going to be reaping the rewards. Now, I want to know from you guys, are you guys using long-term option strategies in order to make short-term gains? Or what do you think about the LEAPS option strategy? Is that something that you're willing to try in your portfolio? Also, if you are already utilizing the LEAPS option strategy in your portfolio, let me know in the comments below. What stocks are you using in order to benefit from the LEAPS option? Now, for those of you guys that made it this far, you guys are the real option traders and you guys are really interested in growing your option portfolio. So, as you guys know, on this channel, I specialize in helping small options portfolio grow consistently over time. If this is something that you're interested in, then go ahead and join the weekly income team. The link is going to be in the description below. Now, go ahead, like the video, subscribe to the channel. But most importantly, we like to help as many people as we can. And the one way we could do that is for you to share this video with them. Let's show them that you can make money from the comfort of your own home consistently over time. Now, until the next video, pushing your investments.